Stocks rebounded today. Did not trade outside of yesterday's range, or for that matter, outside of pretty much this week's range, and still stayed below last week's range. So we're going to break down how bullish today's move was and how trend changing it was in terms of breaking this bearish sentiment we've had for the last little bit, last few days or so. Are we able to get back going on the bullish move? Pretty much since that mid-March low point. We've been on that bullish move. So are we going to be able to get back on that? Was today kind of a telling day in that regard or not? So we're going to break that down, of course, looking at different levels, different indicators, seeing what they're telling us, staying consistent with our approach from day to day. We're also to take a look at some interesting moves in different markets like the dollar and long-term bonds, as well as a similar move to Bitcoin that we saw in a lot of these equity indexes. So we'll see what kind of things that those are telling us from an intermarket relationship standpoint. And then we'll take a look at our trade idea of the day. Is a stock that had a good run. And we'll talk about how to trade, whether or not we think it's bullish or whether or not we think it's just not bearish anymore, and what kind of trade we'll take out of that. So let's go ahead and get started. Today is Wednesday, April the 13th, 2022. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's take a look at the S&P 500 with the market forecast indicator. And a nice little rebound today, a little bit of an engulfing pattern. Didn't have that big of a gap to the downside, but still pretty much an engulfing pattern, though it was also an inside day. Like we traded the entire day's trading range today, ended up inside of yesterday's trading range. We did get back above the 30-day moving average. We did not get back above that 38% retracement level. This is the intermediate decline that we've been on, that we've started to retrace, that we might be bouncing back off. We might not get down to these bearish levels. So as of right now, it's a good day today, but we didn't get back up above some really important levels here to get this going to the upside. The intermediate line still in bullish territory, though still falling. The short-term sentiment was bullish, but barely out of bearish territory, so not the most bullish there. And you can see we're only a 0.5% up above the 30-day moving average. That's on the S&P 500. On the Russell 2000, we're actually still below the moving average. Also, we did not get up above yesterday's high point there. You can see this 23% retracement level of this drop that we broke down below. We haven't been able to get back up above yet. We're also avoided getting below the 78% retracement to where we're like really going to the downside now. So far, you know, we're still okay. We haven't started the new leg lower to the, even though we do have dark pink shading and a red line, we haven't broken down below this. But we're also not bouncing back up out of it either. We haven't avoided it. We're still kind of in kind of wishy-washy mode here. And then you look at the NASDAQ 100. Again, same thing, good engulfing type pattern today, but still trading inside of yesterday's range. We avoided getting below the 62% retracement, which is also the 23% retracement of this decline. So essentially, this decline that we've been retracing with this intermediate move, you know, we would stop retracing it with a new leg lower to the downside if we break that, and we haven't yet. So that's good, but we're not above the moving average. The intermediate line is still dropping, but not in bearish territory, but short-term sentiment is bouncing, but not in bullish territory. So you can kind of see where, I mean, technically all three of those lines are in neutral territory right now, and that kind of shows you just where we're at. We're not bullish anymore like we were here, but we're also not bearish either. You're going to see that's actually going to be a common theme here as we go across a lot of these charts. We got a red arrow still. We still got the red arrow on this week's candle. The PPO is still falling. We still have a negative differential. So we still got one more day left, but we're bearish from that perspective. Same thing here, red arrow, bearish differential, falling PPO, and then the Russell 2000. You can see again, red arrow, bearish candle, bearish PPO. So you notice that so despite a really good up day, it still hasn't changed the bearish patterns on this weekly chart, as well as when you look at the weekly chart on this pattern, you can see we're still, we're still like right at the 50-week moving average. It's still below the 17 and the 8-week moving averages. That's on the SPY. On the Qs, we are easily below all those moving averages. despite the nice little move up today. And then on Russell 2000, again, this is a great week, great move, but still below the 8 and 17. The 30 is still below the 50. We're still below all of that. So that it hasn't changed the longer term outlook, which is to the downside right now. If you look at the 3 green arrow charts, you can see we only have pink shading on right now the Qs and the Russell. The Russell's now got 6 days worth of it, so that's bearish decline. The Qs has had 3 days now, which is again 1 or 2, but 3. And then of course the SPY stopped with only 2, so that's a good sign if we can follow through and avoid. Because again, if we fall back below the moving average tomorrow, it's back to pink, just like that. The Dow never did get pink, right? So it's still waiting to actually get below the moving average, and it might not ever, right? We might bounce right off of this and keep going up to the upside. Taking a look at these indicators on a 2-line basis, you can see it's a great move back above the 30 and the 50-day moving averages, and we kind of held that point of control so far. We're still below the 17-day. The MACD is still below its moving average, though its histogram is rising, and that's pretty much the same pattern you see in all of these. Held the point of control, still below, in fact in this case we're below all those moving averages, including the 17. MACD is still below its moving average and still negative, though the histogram is rising. And then finally IWM is also below all these moving averages, though it did get above the 8-day, still below the 17, 30, and the 50, sitting right on top of each other there. MACD is still negative and below its moving average, though the histogram is rising for 2 days here. So if we can get some follow through on this tomorrow and get above this 17-day moving average, is great. If this is all the rally we get, then that's very typical. Again, it's not uncommon to get bullish days and bearish moves. What is uncommon is to get consecutive bullish days and bearish moves in the consecutive rallies, whether it's 2%. And you can see it's really only barely more than 1%. Getting above 2% is what really ends this bearishness, and that today was not that, right? Today definitely was not that on the S&P 500. Looking at some of these other indicators, we're still above 25 on the negative, still below 20 on the positive. The Qs, same thing, above 25 on the negative, below 20 on the positive. And IWM, we're back below 25 on the negative, but still below 20 on the positive. So still bearish, trend from that perspective. No, it's not strong enough to increase you got to be above 30 to increase the ADX. You can see SPX in neutral territory and trying to ramp up there, still kind of negative on the CCI, neutral on the NASDAQ 100, and then from a Russell standpoint also in neutral territory there. Looking at the trend strength indicators, we are in the cloud on all these, right? The Qs and IWM, we're all in the cloud. Remember, by the time we get to this green shaded area, we need to be trading above that, and ideally we would like to get above this pink before the pink ends. So it's really important we get above these clouds, though we are still below the green and blue lines there on IWM. We're just barely above the blue line on the Qs, but below the green, and same thing on SPY. So we got to get above these levels and get some kind of trend developing. A lot of noise on those particular indicators. You see that too. We're in the lower halves of the Bollinger Bandwidth. We're not in the lower quartile anymore, so we're not bearish anymore, but we're still in the lower half, so we're not bullish either. And so, again, great day today, but lacking some follow-through. As you see in this chart, today's range inside of yesterday's range, right, on SPY. On the Qs, you can see it's pretty much been the same thing, especially if you look at the futures. We basically have traded inside the same range 3 days in a row now. Today's range inside of yesterday's range, finishing at the high, whereas yesterday we finished at the low. That's good, but we got to get above all these lines, right? There's a lot of resistance. Yesterday's high, which would now be today's high, last week's low, the midpoint of the 4-week range, this 38-23% fib combo on multiple time frames, the point of control on the 4-week time frame. I mean, there's a lot of resistance here, for the Qs. Breaking through it would be great, but you expect resistance to hold until it doesn't. Looking at the volume and the trading range today, 73 million shares trading hands, below average. So really, again, we don't want to be below these moving averages and have below average ranges and volumes. That's not enough to change the sentiment, which right now is obviously clearly bullish. And you can see volatility did drop, not surprisingly, dropped 10%, dropped right to that 85% mark, which is a low point, right? There's a support level. It would be a higher low too. There's a support level. Looks like 90% is still acting as a resistance, so we got to get through that if you're going to break out to the upside in volatility. If you look at, here we did break back down below the 17 and the 8-day moving averages on the VIX. We held the 30-day and the 50 for that matter for resistance, and the MACD histogram's rolling over even if the MACD is still above its moving average. So let's get some follow through on this tomorrow. If we can get some follow through going into the holiday, great. If we can't follow through on this and we have a bearish tone going into the holiday, then we're probably going to have a bearish tone coming out of expiration as well, would be my expectation. And that's actually the scenario I'm leaning towards. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. What charts are you looking at that show why you're either a lot more bullish or a lot more bearish than I am? Reply to the Market Outlook tweet and share those charts on Twitter there, and we can be able to see what's driving your sentiment right now. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. One, you liked our video today. And two, you want us to do another video again tomorrow. It's a quick way to give us feedback if you like our stuff. Of course, if you don't like it, you don't have to click on anything. Also, while you're down there, comment. What did you get out of the videos today? What stood out to you? What questions or comments do you have? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content between the videos from day to day. There's my handle at DavidSettle42, and join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out some of these things over here on the right. Click on this link here that takes you to our Market Outlook live page on Monday, Wednesday, and Fridays at 3:30 Eastern Time. On this page, I do a quick 10-15 minute video. I take a look at all the trades we've already done in prior Market Outlooks to see whether we should stay in them or get out of them. We actually got out of 2 today from prior Market Outlook videos, so check that out there. We also put on today's trade already before the market closed. We did that in this video as well. If you come down here to the bottom, you can click on this view more. You can see our upcoming classes. There's our calendar with all of our upcoming classes, as well as our recordings that go back about 4 years. Come down to the bottom here, click that heart. It opens up this tab. Hit that like button. Same thing here. Click the thumbs up icon. Opens up this tab. Hit that like button. Again, the more you do that, it helps get our content out to more of our followers. That's how these algorithms work. That's why we always ask. It also benefits you because Twitter and Facebook promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us right here while you're watching. You can do it right now even while you're watching. All right, now let's take a look at what's driving price action. You can see that commodities really taken off to the upside. This is the first 2 days of the week. Gold rallying, small cap stocks were up 1.5%. Oh, this is the first 3 days, sorry. First 2 days. Let's go in the first 2 days. Is what I wanted to show you. So commodities, gold, the dollar really rallied pretty strongly. IWM was up early yesterday, gave back its gains and had a small loss, underperforming high yield bonds and global bonds. But you can see long-term bonds are down and the rest of U.S. equities are down. Now let's go to today alone, and you can see IWM, QQQ, and commodities. Commodities continuing that run, and the dollar really pulling back, and bonds rallying. So kind of a risk-on move. Now let's put that today's move in perspective of what we've seen so far, and you can see still a lot of negatives here, and bonds are still down for the week. IWM is up 1.5% for the week, along with gold, but commodities are the big story, right? Commodities are really, really moving to the upside. Here is, the indicator here. You can see above 40 on the positive, almost above 40 in the positive index. Obviously not, not down below 20 yet on the negative, but moving in that direction. Real significant trend strength right now, well up above the cloud. I mean, insanely strong trend with the trend noise balance well up above 50, 95. And the trend quality up above 20. I mean, that's a big, big number. It's a very strong trend. We had that parabolic move that we've been slowly refilling in that range. So, if we're looking for if this is the big driver of inflation right now, we're looking for inflation to moderate. It doesn't look like it's going to be moderating anytime soon. Remember, crude oil is one of the bigger drivers, and we've been talking about how great it's been that crude oil has been down, but it's not been out, right? It's still holding here. The trend is done, and we haven't broken out. But it was a good day today when you look at the rally back up above the 17-day moving average. But as of right now, holding the 30 and that 38% retracement line as a resistance. Bitcoin was another big mover today, but you can see great move, but still below all these moving averages and still below the point of control. Same thing as with the stock market. The MACD still, the histogram's rising, but the MACD is still below its moving average, still negative, and we're still below all these important moving averages here. You saw the big move on the dollar. Let's take a look at that. The dollar's been rising, but in a nice little engulfing pattern. Let's look at it compared to the euro, which is the other big currency out there. And you can see that's a pretty decent sized move here. But again, still below the 8-day moving average, so we still haven't had enough of a reversal on that. And long-term bonds are just struggling. Like, they're so low, but they're so parabolically low. This is the lowest point for the last 5 years in terms of the MACD relative. And if you look at it relative to the, that MACD relative to the 200-day moving average. So here's the, there we go, the simple. We're at 14% below the 200-day moving average, which is about where we were over here, sitting on that Fibonacci line. And now we're on the 78% Fibonacci level, and I've got to redo this line here. Oops. This one, activate that and bring it down to those lows. And that's where we're at now. So there still is some pretty significant volume support down below you, and you're trying to break below that 78. And we'll see if we hold, especially with the MACD, like I said, that's so bearish. And you can this MACD is starting to roll up, but if you look at the regular MACD, go back to the 817 that we've been using, exponential. You can see its histogram is rising too, coming again off of really extreme lows. Remember, the histogram bottoms out first, and then the MACD itself bottoms out, and then it gets above its moving average, and then you get above the 17 days. So it's kind of gone. Long-term bonds have made us this big kind of parabolic move here. The negative index getting above 40, the positive getting well below 15. About as parabolic as you get on bonds with all, with these clusters that we're getting there. So you would expect that we might be trying to find a low point here on bonds again with all these clusters that we've been getting. And is that going to be what throws the short-term sentiment back to the upside, and will we be able to get off of and get up to a new near-term high point, which would be back above here and back above these retracement areas. Remember, this 38% retracement is really important because, again, two lines on two different time frames sitting right on top of each other. So really significant resistance up there at the 135 level. Let's take a look at how all the other major economies are doing. Here, let's go to the 12 grid. Throw Russia off for a second. The ETF's not functioning, but if you look at like Canada's bouncing, Brazil still doing well. Lots of dark green shading and green lines in India and the UK. France is trying to bottom out. Italy and Germany are trying to bottom out as well. Japan is still pretty negative. And Korea and China are also still pretty negative. So Asia is still struggling, whereas developed markets, and especially in Europe, they seem to be kind of trying to form a low point along with the US and Canada and bouncing here. So if we can bounce, great. If not, then we're back on these long-term trends that we've been on before. Looking at the sector moves for the last couple of days. So let's go to the sector comparison. And then let's go to the first part of this week here first. And you can see, technology was down, healthcare was down, communication services, materials, industrials, and staples and utilities were actually outperforming. Let's go to today alone. And you can see discretionary took off along with technology, communication services. You also have energy and materials doing well with the weakness in the dollar, and then your safe havens including financials right now lagging. Financials are going right through a important earnings season. So let's go back to the last 2 days. You can see the what we saw before. That's where things kind of ended, and this is where we're at now. So for the week, materials, industrial, staples, energy, all rallying up for the week, with the market down 1%. On the other end of the spectrum, healthcare struggling, financial struggling, and technology lagging behind. So remember, we can't really get going to the upside unless technology leads us up, along with communication services and discretionary. You just can't have one of the three pushing up to the upside. These are all really small weighted sectors, not necessarily the best market leadership. All right, so for our trade idea of the day, let's take a look here at Yum Brands. Yum Brands had a good day today too, just like a lot of other stocks, kind of breaking out a little bit above a bunch of highs for the past week. Intermediate line getting into bullish territory, and short-term sentiment getting into the upper reversal zone. We're 3% above the 30-day moving average. It hasn't quite turned up yet, but obviously you probably think it will tomorrow. And you already have the dark green shading because of the intermediate line. If you look at the long-term view for Yum, we don't really have the most bullish candle this week. You expect that we'll have a bullish candle next week, but as of right now, it's a green arrow, and the PPO is rising. You have positive differential, but not the most bullish candle there. When you look at the 3 green arrow chart here, again, great breakout above the 50-day moving average, but you can see you've got good support down below us at the point of control. Pretty significant resistance above us with the 200-day moving average sitting right there at the top of the value area, as well as with that volume node there. When you look at the directional movement index, they're both between 20 and 25, so no real clear direction there. If you look at the RSI and the CCI, they're both in neutral territory, upper end of neutral territory, but still both in neutral territory there. Looking at the Bollinger Bands, you can see we are pretty much in the upper quartile, but we're not breaking out, right? You like to see a breakout up above the band. If we're going to change from being bearish to bullish, you want to see a breakout up above 100, and we're not quite getting that. So when you see that, you think, okay, we're not bearish. We got a bullish upside. You got a bullish upside, but you don't have a strong bullish trend. At least you're not bearish anymore. Then that kind of screams iron condor, especially when you got good support below you and good resistance above us. So I'm going to sell that mid 20 deltas, buy one strike away, which is $5 strike. Sell the 20 delta over here, 130, buy the 135 for protection. This is what it looks like. Position size fully. You do have, let's see, I believe we have earnings coming up. Yeah, we do have earnings coming up here before May expiration. But when you look at those slices here, let me set slices to break even and then put them out onto the chart. You can see that's a pretty decent wide range there, especially when you look at like the Bollinger Bands here. You got the whole value area inside of the break evens, so you'd have to really break down. If we are breaking down to the downside to that lower break even, then I will be doing a bearish directional trade on that, because that would be a pretty significant breakdown. As you can see, the 2-year chart, there's not a lot of volume down here. We would make an easy move to the downside and then some, especially if you look at like this chart here with the 2-line chart on Yum. Obviously, you'd be breaking back below these moving averages. You already are in a death cross environment, but we are in. We're kind of trying to start a correction, and we'd be moving back towards 104, kind of finishing the correction. It looks like we're kind of stalling. Here's our pullback. Looks like we're starting a correction. We need to see if we're going to fail. And right now we're kind of in the bounce mode to check to see if we're going to get that failed pullback that will turn into an actual correction mode. So hence the iron condor spread. All right, so that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link that's popping out in the top right corner of your screen that takes you to our Market Outlook forum. Open up any new thread there with any questions or comments you have. Reply to anybody else's thread. And let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video down below. As also subscribe to our website at marketscholars.com for free. Follow us on Twitter and Facebook and like those tweets as well. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.